Hey everyone, as it is becoming usual now in Apple's quarterly earnings conference calls, Apple's management team highlights some of their high customer satisfaction scores. So in this video, I'm going to review those and highlight why that's a green flag for Apple stock investors. So let's get right into it. So Apple CFO noted that they have extremely high levels of customer satisfaction, which 451 Research recently measured at 98% for the iPhone 14 family in the US. 98% customer satisfaction. That means out of every 100 customers surveyed, 98% of them say that they were satisfied with the iPhone. That's a really high score and indicates that people are generally happy with their products, happy with the way it works, and that makes it more likely that they will re-up with Apple the next time they are deciding to purchase a new iPhone. But it's not just with the iPhone. Customer satisfaction of 96% for the Mac in the US. Customer satisfaction of 96% for the iPad in the US. So across the board, Apple's customer satisfaction is extremely high, almost 100%. Almost 100% customer satisfaction, and that's really great news. And let me show you how that translates into benefits for investors. Let me show you Apple's gross profit margin here for the last decade going back to 2014. This is the price minus the cost of goods sold, leaving you gross profit divided by sales, and that gives you the gross profit margin. This demonstrates how Apple is able to generate very high profit margins because it's able to sell its products at premium prices because customers are willing to pay those premium prices for Apple's products. When customers go to the store and they see Apple's products are priced at higher than rivals, they still choose Apple's products more often than not, or often enough to drive these types of profit margins and hundreds of billions of dollars of revenue for Apple. There are over 2 billion Apple devices in people's hands today. That means people continue choosing Apple's devices, even though typically they are more expensive than their competitors' similar products in the markets today. And you can judge this for yourself the next time you go into a hardware store, an electronics store. Look at Apple's product compared with the rival's product and look at which one is priced higher. Look at which one is priced higher. And then look at Apple's business and look at how they're still generating hundreds of billions in revenue and generating these types of profit margins. It's because of what I showed you in the previous slide. Very high customer satisfaction is driving pricing power for Apple, which is driving very high gross profit margins that not only are very high for the industry, but they're also rising. You could see this over the decade. Apple's gross profit margin started below 38% and it's ended at 43.45% in the most recent update. So not only is Apple driving very good profit margins, it's been driving that higher. And with customer satisfaction scores still above 95%, that demonstrates that Apple still has pricing power that it can exercise on over the several years going forward. Maybe not just pricing power, but also when Apple introduces a new product, customers' willingness to try that product is much higher if they've already got a 95 over 95% customer satisfaction rating for other Apple products. So when Apple introduces a new product, like a $3,000 VR headset, customers are more likely to try it out because they've already got a good experience with the brand. They're willing to give Apple the benefit of the doubt and try out these products. So, for those reasons, Apple's very high customer satisfaction scores is a green flag for Apple stock investors. But that's it for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.